Welcome to the Capital Market Laboratories Option Backtester. Let's get started. We enter a symbol, pick a strategy, choose long or short, decide how we're going to treat earnings. For now, we'll do nothing with earnings. We choose the length of our backtest, and then how often we want to trade. In this case, we'll just trade monthly options. And here are our results. First, you'll notice our layout. Going from left to right, we go from in the money options to at the money options, to out of the money options. In this case, selling a put in Apple every 30 days for a year looks like a loser almost all the time, other than the far out of the money puts, and even that return is extremely small. But here's how we make this powerful. It turns out that most of Apple's volatility comes from its earnings. If we take this exact same strategy, which is generally a loser, and simply remove trading from earnings, so we'll never trade earnings. Now look at the results. Again, we go from in the money to at the money to out of the money. You'll note all of a sudden, simply by avoiding trading earnings in Apple, but trading all other times, selling a put has been a great strategy. In fact, for a stock that is essentially not moved in an entire year, we could have made anywhere from 14 to 28% simply by selling puts and avoiding trading earnings. We can now do a 2-year backtest. We can see the results over 2 years are even better, and certainly the longer the backtest, the more information we get. Now this is the information that the top 0.1% are keenly aware of. If we want to see what the impact was of earnings, we can just pretend we were only trading earnings and watch how negative this strategy turns. Selling puts in Apple over the last 2 years on earnings has been a disaster. This is the power of being able to do a backtest to toggle between trading earnings to never trading earnings or trading at all times. So this is what it looks like if we only traded earnings, and this is what it looks like if we always avoid earnings. Further, we can customize our backtest to make it realistic. Go to Settings. We can select the number of contracts we want to trade. Let's make it 10. We can choose our execution fill type. You can choose market orders, which is buying on the offer or selling on the bid, but that's really unrealistic. The most realistic facility for verifying a backtest is to trade halfway between mid and market. That is, we sell closer to the bid when we sell an option, and we buy closer to the offer when we buy an option, but we don't go exactly at market prices. Next, we can input our custom commissions. Let's put in a stock commission. Let's put in our option ticket fee. And let's put in our price per option contract. Now we can rerun the backtest, and we can see the results. For those who are option experts, you can note the deltas that we're backtesting. If we want to customize these deltas because we see that selling out of the money puts did the best and we want to look deeper, we can go back to our settings and change the deltas that we're backtesting. Let's do everything out of the money. Again, this is an advanced application of the backtester. It's not necessary to use if you don't want to. And if you have curiosity about what a delta is exactly, we have a help sheet right here, which will tell you exactly what a delta is and how to use it when you're trading options. So if we sell puts in Apple, avoid trading earnings, trade every 30 days over the last 2 years, had we been selling the far out of the money puts, the 15 delta puts, that backtest with realistic commissions and execution prices returned nearly 40%, while the stock, as we can see here in this graph, is essentially unchanged over 2 years. We can focus on that strategy by unselecting the other backtests. Here's how the stock did, here's how this strategy did, while eliminating trading for earnings. When we're ready to dive deep into the details, we simply click on a tile, and here we see the backtest details, selling the 15 delta put in a 10 lot. The return was 39.7%. We had 28 winning trades, 6 losing trades. We can see how the stock did during this 2-year period. We can see the net cash we generated, and we can even see how many commissions we paid. Further, we can go trade by trade to look at every opening position and every closing position through 2 years, scrolling down every single trade, or if we prefer, take it all and put it into Excel. When the time is right, you have all the detail you need. So to use the option backtester, we can select any ticker, including ETFs like SPY, QQQ, IBB, whatever you want, any strategy, long or short. We can trade only earnings, we can avoid earnings, are just trade normally for our rollover period, ignoring earnings, and we can set the backtest length and how often we want to trade. For those of us that are weekly options traders, we would put a 7 in here to trade the weekly options. Now, this is the reminder. The top 1% are keenly aware of how option strategies perform in the market. If you're placing trades without knowing how they've performed in the past, hedge funds and high-frequency trade firms are taking advantage of our gap in knowledge. We are being outgunned by the high-tech trading shops if we're not being methodical about the way we trade options. Thank you for watching this demonstration of the CML Viz option backtester. Here's to better and more profitable trading. Be powerful.